Come on down to the totally imaginary Terrence store. We've got every size of Terrence stuffies from giant Terrence to tiny Terrence. We've got Terrence t-shirts and sweatshirts. We've got giant Terrence coffee mugs for when you need that extra kick in the pants to get your day going. Come on down and get your official Terrence merchandise today. Welcome to Accounting How To. I'm your host, Carolyn Grimm, and that's my sidekick, Terrence, or that's my sidekick, Terrence. It's so hard to tell. There's so many of them. We're here to put the fun in accounting fundamentals. Today, we're exploring the wonderful world of merchandising businesses. When we start out learning accounting, we start with the simplest type of business, service businesses. So a service business is one where you trade time for money, or better yet, trade value for money, but that's another video. So examples of service businesses are things like accounting or pet sitting. You do a thing and you get paid for doing that thing. And the accounting is pretty simple in a service business. Now, a merchandising business is more complex from an accounting perspective. So with a merchandising business, you need to first buy the stuff before you can sell the stuff. Walmart and Amazon are merchandising businesses. If you go to yard sales and buy stuff to resell, you have a merchandising business. So you're bringing together goods and people. Now, to demonstrate how merchandising businesses work from an accounting perspective, we'll use our new totally imaginary store that sells Terrence merchandise. Here's a sample product. I actually stole this from my dog. Now, before we can sell this merchandise, we have to buy it. Now, this creates some changes in our accounting system. The first change that it creates is some new accounts for our chart of accounts. And again, this is the point where we need that new account siren. Terrence, I thought we talked about that. I thought you said you were going to do that. No? So hard to get good help. The way that our chart of accounts is going to change for a merchandising business is that we now need to keep track of how much we spent for our merchandise. Right, so we've got to keep track of all of these different items that we purchased for sale in our store. So we're going to do that on the income statement side by having a new expense account called cost of merchandise sold or cost of goods sold. And that's where we're going to collect all of the costs involved in the merchandise that we sell. The second change that's going to happen in a chart of accounts is we now need to have some sort of an inventory account. Maybe it's called inventory, maybe it's called merchandise inventory. Depends on what the chart of accounts is for that particular company. And that's where we're going to record all of our purchases. When we go out and buy things like this, that's where we're going to record our purchases. Now, as we dig deeper into merchandise businesses in our other videos in this playlist, we'll add more accounts as we need them. But for right now, we're adding our cost of goods sold or our cost of merchandise sold expense account, and we're adding our inventory or merchandise inventory account. So as far as changes to our financial statements now, on the balance sheet side, we're really adding just that one new inventory asset account. But on the income statement side, we have some pretty significant changes. So let's jump into a spreadsheet so you can see that for yourself. All right, so let's look at an income statement as we've seen it previously. We're now going to call this a single step income statement because our accounting abilities are expanding. So previously what we've looked at was pretty simple: revenue minus expenses equals net income. And that's what you're seeing here. So we've got sales of $7,000, and then we've got operating expenses, and we have detailed those out as advertising, sales commissions, rent expense, supplies expense, giving us total operating expenses of $1,285. When we subtract our expenses from our revenue, it gives us a net income of $5,715. So with a merchandising business, now we're going to learn about something called a multi-step income statement. So this is single step. Let's jump into our multi-step income statement. So here we go. We see here our sales of $7,000, the same as we had in our single step income statement. And now we've added a line for cost of merchandise. And now we've added a line for cost of merchandise sold. And again, this might be called cost of goods sold. So the revenue that we generated for this period of time was $7,000. And the expense that we generated was for that merchandise that we sold. It wasn't for everything that we've ever bought. It wasn't for all of our inventory. It was just for those items that we sold during that same period of time. That's the expense that we want to capture. Coming back to the matching principle, we want the expense that goes along with that specific revenue to appear in our income statement for that period of time. So we're going to take our sales, our revenue, minus our cost of merchandise sold, and that's going to give us gross profit. So this is a new piece to our income statement where we are looking specifically at what it cost us to generate that revenue as far as our goods that we actually sold. That's going to be an important number for us to track in our merchandising business because we need to know what that percentage is. What percent of our sales is going towards buying this merchandise that we're selling? So if our cost of merchandise goes up, that means our gross profit goes down. If our cost of merchandise goes down, that means our gross profit goes up. And that's a really important cost relationship. So we go from our gross profit down into our operating expenses. And before, we just kind of lumped all of our expenses together, listed them out. Well, now in a multi-step income statement, we're going to start to categorize things. So in this case, we have selling expenses. We want to look at specifically what it costs us to sell our merchandise. Because again, this is going to be an important cost relationship. Does it cost us $1 in selling expenses for every $10 sale? Does it cost us $2 for every $10 sale? So this is something that we want to keep very close track of. So here we've separated out our selling expenses. We've got our advertising expense and we've got our sales commissions. We add those two together, it gives us $260. And then our second section is going to be our administrative expenses, or you could call them our overhead expenses. These are items that we have to spend money on, but they're not related to purchasing our product or selling our product. So in this case, we have rent expense. We've got to pay our rent. And it doesn't matter whether we sell one product or a million products, we still have to pay our rent. And then we've got supplies expense, and those two added together give us $1,025 for administrative expenses. Then we're going to add those two categories together to get our total operating expenses. Now we're going to take that gross profit number, we're going to subtract our other expenses here, and that's going to give us income from operations of $2,215. So income from operations is a very specific type of income. So before we were kind of lumping all of our income together. If we had rent revenue and we had sales revenue, we were kind of lumping that all together to come up with this net income number. But in this case, we want to be very specific about where this income is coming from. It is coming from our operations. It is coming from us running our Terrence store. And if you were looking at this business to invest in it or to purchase it, you would want to know this number because this tells you whether the store is actually making a profit or not, regardless of anything else. Now let's talk about that anything else number. So down below in a multi-step income statement, we're going to have this section called Other Income and Expenses, or non-operating income and expenses. And this is going to be for those unusual items or things that are not related to running our store. Now, in this case, we have insurance proceeds. Let's say we had a broken plate glass window at the store. Somebody threw a rock through our window and we filed an insurance claim. Insurance paid us $500 for that loss. Well, that's not part of our everyday running our business. So we want to separate that out. This is an unusual occurrence. Well, we hope it's unusual. We hope we're not going to get more rocks through our imaginary window. And then we have interest expense. So interest expense is us paying on maybe a business loan or a vehicle loan. And that is not part of our everyday business. This is a financing thing. So if you were buying this business, You might have a completely different financing picture. You may be paying cash and have no loans. So we want to separate that out because that would be different if somebody else owned the business. So this is not part of our operating of the business itself. So we're going to net those out. We're going to take our other revenue and subtract our other expenses, and we end up with a total of $350 in other revenue, which will then add to the income from our operations to give us what is now our net income of $1,865. So what a multi-step income statement does is it starts to provide us with more sophisticated information that will help us to run our business. So we're going to keep a close eye on what that gross profit percent is. We're going to keep a close eye on what our administrative expenses are, our sales expenses, so that we know how changes in those numbers impact the profit of the business overall. So those relationships now are going to become very important. Now this video leads us into how to do journal entries for purchases and sales transactions. We're going to go over shipping, FOB destination, FOB shipping point, and how we track those things. And we're going to look at tracking inventory costs. And of course, I've linked those other videos in the description, and I've linked the spreadsheet in the description as well, so that you have those income statements for reference moving forward. Until next time, stay balanced, my friends.